Hi guys, welcome back to another YouTube video. My name is Jack. This is going to be episode 4, part of the gem crash course. So if you are new and you haven't watched the previous videos, I highly recommend you check them out so you have a better understanding if you don't understand something I mention. Before I get started, I'll leave a link in the description to the Discord. Check it out, it's free. But without further ado, let's get into it. So I have handpicked this date just because of the simplicity of the video, but it's the same logic whenever you on any pair, on anything that you want to use. So with that being said, we have option 1 and option 2. So option 1 is external range liquidity to internal range liquidity, and internal range liquidity to external range liquidity. External range liquidity are just old swing lows and swing highs, and internal range liquidities are bullish or bearish fair value gaps. Option 2, and I'll get into this in just like late after option 1, is just using the high and the lows and where price closes to understand. And yeah, so option 1 I'll go over first. So we have a internal range of liquidity here for value that is bullish, and we also have a swing high up here. This is our external range liquidity. Okay, so just look at that and look at price. So what do we see? We see a move from internal range liquidity to external range liquidity. So we would have a bullish bias until this external range liquidity gets taken. Once this external range liquidity gets taken, I would look for a move to internal range liquidity. Now we are at all-time highs. I would not long at all-time high. I would look for shorts because that would be above a swing high. So that being said, my bias once this external range liquidity gets taken would be bearish. I would look for a bearish internal range of liquidity. Now, of course, if this candle was to close bullish, it would be a different scenario to what I'm about to explain. And this is when option 2 comes into play. Okay, so I'm just going to move this over to the side. Okay, I'm going to zoom in and I'm going to mark out previous day, okay, high, and the previous day low. So we take previous day high, we've also taken previous day low, but we've closed in a bearish candle. Okay, my bias for this day, okay, for Thursday coming up would be bearish. I would be looking for a move to a internal range of liquidity. I hope that makes sense. So let's see what the next day does. The next day comes up, takes out any liquidity resting above here, but it closes, it comes down to this internal range liquidity. So if I had a bearish bias, what would I do? I would simply go down to the lower time frames, which I'm not going to do in this video because I don't want to overcomplicate this video, and I would look for a bearish 1 hour CSD. Assuming that it follows my kill zone times and everything, and there's a unicorn in there, then I would take a trade. Now, this is where it can get very confusing, or it might be difficult to understand potentially what price is going to do. But what you guys need to understand is that price is now located in a bullish FEG. We do not look for longs, short. We do not look for longs in a bullish internal range of liquidity. Okay, so my daily bias using option 1 would be bullish for Friday. Okay, now using option 2, I'm going to mark out previous day high, previous day low, previous day high, previous day low, and you can see that price has closed below previous day low. Okay, if we're going to respect this internal range, this bullish FEG, I would not want to see daily close below here. So in essence, you could say to yourself, yeah, Friday, I'm unsure what my bias would be. But if you follow the rule of being in an internal range of liquidity, a bullish internal range of liquidity, you would perhaps want to see a 1 hour change in the state of delivery to confirm your daily bias. Because this is a very impulsive move down. This is a strong indication that price will potentially come even lower. So I'm actually on this 50-50. I'm more so certain that price will be bearish. So I could assume I have a bearish bias until I see a 1 hour change in the state of delivery. But this is where you have to be an independent thinker. So we'll go to the next day and see what happens. Price fails to take this low and ends the Friday with a bullish candle. Using option 1, our bias would have remained bullish because we're in a bullish FEG where we look for longs because we're below swing points, and that bullish bias potentially would have you a setup. There would probably be a 1 hour CSD, 15-minute CSD, and you could take your trade. Notice how price at opening barely goes down. So with that being said, on the lower time frames there was probably clear indication that price was confirmed with your daily bias that we were bullish, if that makes sense. Okay, so you see how option two, take it with a grain of salt. It kind of should support potentially where price potentially wants to go, but option 1 is the main one that I use. So what do I do now? Well, it's a Friday. The next trading day would be Monday, and I personally would not, if I was using internal to external liquidity, I would be expecting price to go to here because we're in a bullish FEG. So that's what I would be expecting to happen. Okay, so let's say I would skip the Monday, so we'll see what Monday does. There we go. So Monday, we can then use option 2 in this scenario. So if you had a bullish bias, potentially you had a bullish setup here. Okay, but I don't actually know why that doesn't show Monday. Maybe that's a bank holiday. Interesting. Anyway, you mark out previous day high, previous day low. You can see we take previous day high, but we close back into the range. Option 2, this would tell me, option 2 would be telling me that I have a bearish bias, and option 1 would be indicating a bullish bias. But I'm going to be more so looking for a bearish move, not a bullish move for Wednesday. So let's see what happens. We get a bearish move. We go down. Distress close below this internal range of liquidity. That then violates it, disrespects it. So now what do we have? We have previous day low, previous day high. What do we have over here? I'll put an indicator on so you can see. We've obviously disrespected this with this close. We have internal range liquidity here. So if I just make this, it's quite small. It's quite small. So using option 2, I would now have a bearish bias to this internal range liquidity. Once we hit this internal range liquidity, I want to see how price reacts, but I would be bearish to this internal range liquidity. Let's see what Thursday does. Thursday continues lower, disrespects this FEG using the option 2 that I spoke about. Take the low, close below it. Where do we have our next internal range liquidity? Here. As we close below this low, clearly disrespect this FEG, this internal range of liquidity as well. My bias is still going to be bearish. If my bias is to be bearish, I'd want to see this low get taken and not the high, obviously. See what happens. Right now we're moving down quite a bit. We obviously do have this external range of liquidity here. We then disrespected this FEG, so I still have a bearish bias. Now what I think could potentially happen, and this is not hindsight, I can't even remember what the chart looked like when I looked at this. I think we could potentially come down and have an up close candle, potentially, but let's see. There we go. Okay, that was not hindsight one bit. Okay, I genuinely do not know what this chart looked like when I went back to it. Yes, it was the 31st of May. I genuinely, and that's up to you if you want to believe me, can't remember off the top of my head what happened. But do you see how I look for a long at this internal range of liquidity? Price obviously has come into it. You'd then go on to the lower time frames, look for a bullish change in the state of delivery, which will be my next video. And then your bias matches. You get just another confirmation. So that's that. And you see how we take previous day low, but now close above previous day high. So, and we also disrespect this bearish FEG. So what does that tell me? Price is more than likely going to be bullish on Monday, and so I would be bullish on the Monday. As you can see, price on Monday, which I would highly avoid trading on Mondays, just because Mondays are low probability by themselves anyway. And I don't know if there was news here or whatever. Price clearly was bearish in probably for the day, but then reversed up potentially. Well, no, it did. Sorry, it comes up. It fails to take previous day low, but it takes previous day high, and we end with a bullish candle. Now this I'd be very careful with. On the Tuesday, I would still have a bullish bias. If I put on my indicator here. You can see potentially this inversion fair value gaps pushing price down. I'm not going to go over that right now. Ignore that. We're only going to use fair value gaps for right now. But if I now mark out, you see I'll go from internal range liquidity. That was our external range liquidity to aim for there. Previous day high gets taken, but we close below it. So to be honest, on the Tuesday, I'm not really sure what would happen. I would probably stick with a bullish bias, and then obviously on the lower time frames, assuming the market structure is bullish. So we can see what the Tuesday does. Let's say we remain bullish. Again, it's the same sort of, coming down but going back up. So yeah, bullish bias. We still get a bullish close. In this scenario, this is called a bar, where we don't take the high or the low, and we just kind of are in this bar. So I would probably want to see what Wednesday does. I'd probably potentially still remain bullish. It's not giving me a lot of confidence that we are going to go up here with this, because it's not really showing me. But anyway, we'll see what Wednesday does. My bias on Wednesday would be bullish. And look at that. So objective is completed. We also actually take this external liquidity. Just about, probably. Create equal highs. So yeah, that's how I get my bias. I hope this was clear. If you guys think you want another video like this, I'll probably do one maybe on the Discord, a live session. You guys can ask questions and whatnot. But yeah, that's how I do external to internal, internal to external range liquidity. Now, I want to show you option 2 without using option 1, just to really make your mind explode. So what I'm going to do, so no one can complain, I'm just going to zoom out and just stop and create and just, yeah, there we go. And I'll zoom in. Oh, sorry guys. Oh, not that. I've got to go on the whole all the contracts. Do that again, just to show you that this is not, you know, in hindsight or whatever. I don't want to go too far, but actually no, it doesn't matter. Oh, let it click. There we go. Cool. So let's try to use this model, option 2, here. So what do we get? So we're not looking at internal range liquidity or external range liquidity. We're just looking at the lows, the high and lows of the previous day. So we have a high here and the low here. What would my bias be for Friday? Bullish. But remember, Friday could be a retracement back into the weekly range. Go low, end up higher. Bullish bias for that day, as I said. You just got to be wary of other things. What do we get? We take that previous day high, don't take previous day low, so but we close back into the range. What can I expect for Tuesday? I can expect, let me mark this out, fail to take, we take this high but we close back in the range. I would look for this low. We don't take this low, we take this high, but we close back into the we close below the high. I can expect us to go Wednesday bearish. There we go. Marking out previous day low. We don't take previous day high, we take previous day low, close below that. What can I expect for Thursday? I can expect price to at least take Wednesday's low. We take Wednesday's low, bearish bias, clearly there. Again, take Wednesday's low, close below it. What can I expect price to do the next day? Take this low. We fail to take this low. Instead, we take the high, close above it. What can I expect for Monday? This high to get taken. We take that high. Again, take previous day high, close above it. What can I expect now from Tuesday? Potentially we take this high. I'm not going to look to the left. I mean, we'll see what the price does. Bullish, fail to take previous day high or the low. What can I expect for price to do? This is, I think, a potentially, actually, sorry, I would expect price to take the high. Sorry, my headset died. So we failed to take previous day high. Obviously, if you see there's a fair value gap there, guys, just pointing out, you know, use these things together as your advantage. We take previous day low, but we close back within the range. What can I expect for the next day? This high to get taken. We take this high, close above it. What can I expect for the next day? This high. We take this high, still close above the candle. What can I expect for the next day to do? Potentially, it's not like guaranteed, but this high. We fail to take this high. We take this low instead. What can I expect the next day to do? Take this low. We take this low, but we close just above previous day high. What can I expect the next day to do? Wednesday, take this high. We take this high and go up. What can I expect the next day to do? We take this high. We take this high. We just about close within enough of the range. What can I expect the next day to do potentially? This high, just using this bar, I'm not using internal to external at the minute. This high, that's quite unlikely. We're probably more likely to reverse and take this low, but we'll see. We take this low, end with a bearish candle. What can I expect the next day to do? Take this low. We take previous day low. What can I expect the next day to do? Potentially take this this low here because we closed below this. But remember, we're in a bullish FVG, guys. So what do you think happens here? I think it's going to be bullish, but option 2 would say bearish. Let's wait and see. See, I chose this at random, guys. This is just how you get your daily bias. So that's pretty much me explaining them both options. If you have enjoyed the video, please leave a like, comment, subscribe to the channel, and let me know. Don't forget to check out the Discord. Any questions, fire away on there. I'm more than happy to help with any questions you may have. But other than that, take care, guys. Have a good day.